Hello everyone, Chin here back with a portfolio update where I intend to grow the portfolio from 10k to 20k in 1 year. So it is now August, officially 9 months from 29 October 2025 when I started the portfolio, and it is time to see how well or how badly did the portfolio do. So did I go bust like Leopold, or am I a Warren Buffett in disguise? So let's find out. So if you refer to this graph, right, the yellow line is the original target that we set out to achieve, which was to grow the portfolio from 10k to 20k in 1 year's time. And the blue arrow is how much capital that I've allocated into the portfolio, and the red line is the day-to-day value of the portfolio. So the current value of the portfolio stands at $9,781, and the capital allocated has actually gone past 20k at $21,500. So after 9 months, right, how much did Chin actually win or lose? So effectively, I lost a total of $12,353.81. And actually, if you look at the chart, right, this is not even the worst point. The worst point was actually just 2 weeks ago on 29 July when iron dropped to $29 and the portfolio, like all leverage portfolios, right, actually dropped very badly, and the biggest loss was actually closer to 15k. So by now, you must be thinking, wow, heng, I never invest. So what actually happened, and what can we learn from this portfolio, and what am I doing moving forward? So first, what actually happened to the portfolio? The portfolio actually reached an all-time high of close to 20k back on 27 May 26. So what exactly happened within the 2 months, right, that actually destroyed the whole portfolio? To understand what happened, you must first understand what is situational awareness. If you did not know, situational awareness is a hedge fund ran by this guy called Leopold, who was framed as the god of investment in 2026 with over 400% of returns, with a very concentrated, highly leveraged portfolio of going all long AI infrastructure names like SK Hynix, Nebius, CoreWeave, Bloom Energy, SanDisk, and you guess what? Iron. So he was very heavily short on enterprise software like Adobe as well. And starting in June to July, everything AI related started to burn. So names like Bloom Energy, Nebius, Aaron actually dropped around 35%, and stocks like Adobe, right, which was actually on the downtrend for a good 5 years, actually started to turn up as well. So talking about a double whammy, right? And guess who was 4 times leveraged, right? Mr. Leopold. By July 24th, Leopold was asking investors for more money, and by 28 July, he got margin called by the big banks like JP Morgan, Goldman Sachs, and Morgan Stanley. And by 30th July, the uncle of Wall Street, Citadel's boss Ken Griffin, is back again to buy out the entire equity book at a 10% discount, which actually marked, and hopefully, the bottom of the recent pullback in AI-related stock. Leopold was not the only one that got slaughtered, so many Koreans were also slaughtered in this correction due to their leverage position. At least, this is the widely accepted story on why semiconductor and AI-related stocks seemingly started to drop from nowhere, even when the earnings were actually pretty good. Now that we know why the portfolio got destroyed, what can we actually learn from this portfolio? So I think there are 2 key points that we can learn from this. The first is that it is impossible to predict what happens in the market, and you are always told stories retrospectively and told the answer that the big players want you to know. Even if you are bullish on a company, there are times that the company stock does not go your way, and it is impossible to predict on the short term where the stock will go. And this brings us to the second point, that leverage actually really goes both ways. If you hold leverage products, your emotions will feel like a roller coaster, and on the ride up, you will feel double the happiness, double the excitement. But on the way down, you will feel as if your boss gives you another kick when you feel like you are already drowning. When you're invested in leverage products, decay is one thing that you must absolutely understand. So back to our roller coaster analogy, right? It is like sitting on a roller coaster, but with the rails slowly rotting away. To understand what is decay, we must first understand this basic math problem. If a stock drops 10%, how much do you think it needs to grow back for you to be net even? So if you answered 10%, you are dead wrong. The stock needs to go up by 11.1% to go back to where you just started. And if you drop by 50%, you will need to go up 100%. And because leverage ETF resets their math daily, if on day 1, assuming iron is at $100, if iron goes up 10%, IRE will go up 20%, which is at 120, right? But if the next day, iron drop back 10%, iron will be at $99, but what about IRE? IRE will actually be at 96. So congrats, you just lost 4% instead of 1%. This decay will slowly kill your portfolio over time, and especially in a downward or sideways market. And yep, guess how iron was trading in the past year? A sideways volatile market that goes nowhere. Which is the absolute worst for leveraged ETFs. And while it is difficult to calculate how much it actually damaged the portfolio, I would think it at least burned off 20% of the entire portfolio due to decay. So I was lucky in the sense that I did not use borrowed money for holding IRE shares. If I had simply held IREN shares and had averaged in my IREN shares instead of IRE shares, I may not be at a loss or probably just break even now. So I think one thing that we can learn is that if you are just starting out, you do not need to use any leverage. In fact, I can say that leveraged ETFs are the easiest way to get yourself in trouble. So logically, the next question you might ask me is what will I be doing from now onwards? Do I call it quits and stop the portfolio? Or do I double down and average in? Honestly, I have not fully decided on what to do yet. There are a few options in mind, but perhaps I will share more on the next video. Comment down below on what you would do. But anyways, the portfolio is completely transparent and public, so remember to subscribe if you want to follow the portfolio or if you simply want to console a set so. So let's learn together and I'll see you on the next update. Stay safe out there and I'll see you on the next one.